Hey Jake, how you doing? Good morning. Where are you calling in from today? Miami. Very exciting. Very good weather. It's actually, I feel like I've got Miami weather in Denver out here today, but very excited to have you on. Zuhar and Tony from the Infinio team are going to be joining us today. Zuhar and Tony, can you guys hear us all right?
Yep.
Perfect. And I've got you
Yes.
guys.
Yes, sir.
Great. Well, I believe we're just waiting or for Connor from Meta Street. And then we'll kick things off here. We've got a really exciting space today. Super excited to talk with Jake and Watches.io about their new partnership with Meta Street. I had the pleasure of listening into them kick off the partnership on a space of their own last week. So very, very honored they made the time for us today on our real world asset spaces. So thank you for joining us, Jake.
Absolutely. I'm excited about it.
I'm gonna send Connor a quick message here, and see if he is gonna be joining us soon. And then I'm also gonna get a quick tweet pinned for us. Oh, there's Connor. I'm gonna get a quick tweet pinned for us, just for questions in case anyone has them. Hey Connor, how you doing?
Hey guys.
Can you hear us all right?
Yep.
Beautiful. Well, I'm just gonna get us a question or a tweet pinned here for questions. Um, and then once I do that, we'll dive right in. I really appreciate you joining us today. Um, so I just pinned that tweet there. If you're listening, please feel free to drop questions for Connor or Jake, our real world asset lending experts, both different sides of the industry. They actually just announced a really exciting partnership, which is what we're going to be focusing on today. And so, without further ado, now that we've got everyone here, I think that we can start to jump into things. So, if you're just joining, I'm Jackson Blau, our head of community management at Infinio. At Infinio, we're tokenizing life insurance. And so, what we do here is every other Tuesday, we hold these real world asset theme spaces and we highlight exciting themes and topics in the space. And we're super excited to have on Connor from Meta Street and Jake from Watches.io to talk with us about their new partnership. And so, without further ado, I'd love to let you guys introduce yourselves and your guys' companies to the audience. And so, Jake, if you want to kick us off, that'd be great.
Yeah. So my name is Jake, founder and CEO at Watches.io. Watches.io is a fresh take on watch trading. It's a platform where sellers can put watches up for sale, buyers can buy them. And when you purchase a luxury watch on our platform, we offer a guarantee of authenticity because every single watch is thoroughly tested and inspected by a certified watchmaker. And then upon the completion of the transaction, we either send you a watch backed NFT or a luxury watch. So that's like a feature. You can now purchase a luxury watch digitally or physically from our platform. The go-to-market product for us was a basic portfolio and analytics tool. So kind of like how you log into your Robinhood or TradingView, and you can just see where the market stands and how your specific holdings are doing in a specific period. You're now able to do that with luxury watches. And that was what we launched with. And recently we put this marketplace up into production and users are now able to watch trade. The platform, in my opinion, is the best attempt, and it's bringing the world one step closer to looking at a luxury watch as a financial asset and to really financialize the luxury watch market. Connor? Yep. Oh.
Yeah, that's phenomenal, Jake. And yeah, Connor, if you want to go in next, that'd be great.
Yeah. Hey guys. My name is Connor Moore. I'm the co-founder of Meta Street, which is basically a structured credit product, structured credit protocol. We started it in 2021. We've done about $300 million of loan volume, iterated a few times on protocol design, have about 20,000 users. And I guess the way to think about MetaStreet is in the context of lending protocols, what you typically see in DeFi is things like Aave, Compound. These are basically margin accounts. So you own, a token that might look and feel somewhat like a stock, and you can borrow money against that and leverage trade that token. Structured credit or what MetaStreet does looks more like traditional debt markets where you have fixed duration, fixed interest rate loans, and borrowers are taking out those loans more so for operating use cases as opposed to trading, although you certainly could also be trading with that money. And so the MetaStreet protocol then allows a variety of different lending participants to collaborate with each other and stack capital within a pool, and ultimately creates an efficient capital market. And so when you think about what a bank does in kind of like the real estate space, for example, they'll give fixed duration loans to property, and then they'll sell those loans into a broader securitized market, and those loans are now packaged and exist in tranches and so on. And so it's not too dissimilar from that, except that this is a fully on-chain, permissionless set of contracts, and every participant can sort of participate in this market without requiring a centralized intermediary to structure or execute any of the loans. And so we announced this partnership with Jake and the Watches team because this is one of the first examples of like heavy utility outside of the traditional crypto space for DeFi lending. So now with the MetaStreet Watches partnership, you could basically take out a loan against your watch, and where that money is coming from is a variety of lending participants that have like various risk tolerances, various preferences, and all of those different participants are sort of organized to create one efficient market for borrowers. So I'm sure we'll go into a lot more detail, but that's sort of the overview.
Jake, did you have something to add there?
I kind of really support and I believe in MetaStreet compared to most of the other NFT borrowing and lending logics that are out there. It's definitely in the direction that I kind of view like the future of borrowing on chain. It's now down. I think like a lot of what takes place right now is a little bit more primitive, but MetaStreet I think is something that actually can replace the way traditional lending markets and borrowing markets exist.
Yeah, I think like the main goal with everything within our design is all around scalability. And so when you think about what your alternatives are today, if you're creating a marketplace that just pairs individual participants, an individual borrower with individual lender, that's certainly like a very acceptable lending market design today with the scale that we're at. But I think like the goal, right, is to build stuff that is scale invariant. And so if I said, can that market design support 500 million, $1 billion worth of outstanding loans? I don't think it could. And that's why the design for MetaStreet is really focused on pooling capital together to have a market design that is totally agnostic to the number of participants that are in there at any given time.
That's incredible, and that makes a ton of sense to me. And it seems like you guys are almost a match made in heaven over at Watches.io and MetaStreet. Zuhar or Tony, do you have any initial questions for our guests after just hearing them give some more context, or should we dive into our planned topics here?
Yeah, briefly, I'd like to say, gentlemen, thanks for joining us. This is one of the things that I think frequently amazes me about the real world asset or RWA, as the cool kids are calling it these days. Market is seeing the absolutely innovative ways that it can be applied to things that you wouldn't necessarily think of. So few days ago when this hit my radar. I hadn't even thought of it, and it just makes so much sense that you folks have done this. I will admit to being a bit of a watch geek myself, and it's probably a detriment to my bank account that I've stumbled upon your site, but we'll see how that works out. But yeah, look forward to the discussion. I think this is absolutely fascinating what you guys are doing.
I don't know why it's got to be a detriment, man. Just buy a watch that's holding its value well.
No, that's true. That's true.
I guess he means his liquid liquid.
Exactly.
But not anymore.
Although, I mean, that's
we
sort of
can
what
solve-
you're trying to solve, right?
Yeah,
Solve for liquidity.
That's what we can solve. Yeah, exactly.
Yeah, it's great.
It's super interesting. So we're super in the weeds with the real world asset space. As I said, we're trying to do similar things and are doing similar things with life insurance here at Infinio. A lot of people don't know, but there's a cash value component to life insurance that is often lent against. And so we're building out a more robust lending solution for these policies by tokenizing them. And so we've been keeping up with the common themes in the real world asset industry right now, which really seem to be one, tokenizing treasuries and money market funds. And then additionally, people love to talk about tokenizing real estate. But when you look at watches, it's really just such an easier use case than trying to bring real estate on chain. And even with money markets, it makes so much more sense to have these watches on chain. So it's very exciting to see you guys bringing this industry into the DeFi space. So with that, I'd love for you guys to give a little bit of an overview of how you guys are working with Base and how you guys are utilizing them for your lending and borrowing solutions.
Sure, I'll talk about how we use Base, and then Connor can go through the second part. We basically the smart contract level is on Base. The benefit to Base is that, for one, when you transact, like let's say you buy in USDT or some other currency on our platform, it automatically gets swapped into USDC and put inside of the smart contract. There's no gas fees for USDC on Base. So that's an incentive for us, as we would like to bring the least cost in transacting onto the user. That's a benefit to us for using Base. Additionally, I'm pretty bullish on the future of Coinbase being able to onboard a mass amount of users. Like a lot of the watch traders that list on our platform are already Coinbase KYC users, or they have institutional Coinbase accounts. So just being able to migrate that audience onto the platform is definitely an incentive as well to using Base. And then, it just goes in line with, I think, the like smart wallets and the account abstraction primitives that Base is creating. Not that there aren't other blockchains that are doing similar things, but I think that Base is moving in the right direction with that. Then lastly, it's definitely so our contract has a couple different touch points of where gas fees exist. Like, for example, when you buy a watch for 10,000, we also have to collect sales tax. So let's just say, and we have to give the seller their fees, and we have to take our fee. The seller gets their proceeds. We take a fee. That's like 3 different transactions from our escrow. So being able to use Base or any other L2 or a Solana, whatever, the incentive is obviously the cost. Like, past the fact that there's no gas fees, just the fact that it's like a cent or a couple of cents to operate is a big upsell for us. Like when we were on Ethereum, we were paying anywhere between like $3 to $50, which was fairly unforecastable to operate the contract. So using an L2 is very beneficial.
That makes a ton of sense to me. And I was going to ask, so you guys migrated from Ethereum to Base, right, Jake? Just for context for our listeners.
Yeah, we launched on ETH, and then recently, like just a couple weeks ago, we migrated onto Base.
That's great. And Connor, has MetaStreet been integrated with Base for a while? Is this your guys' first integration with them? How do you see building on Base?
Yeah, this was our first reason to deploy to base. There hasn't been like a large borrower base to date on base for like any of these products. So Jake's team deploying to base meant that there was a reason for us to. But I think broadly, like we're big believers in the FAT protocol thesis. So, eventually, MetaStreet's contracts will likely be on every EVM compatible chain, and I think like ultimately we think of the success of the protocol being that MetaStreet provides this sort of structure and market dynamics for accessing lending across all of these different asset types, whether it's watches or life insurance. Anyone can create a pool, anyone can spin up the contracts, and so that's like our goal is for the overall user experience to be sort of abstracted away from like a MetaStreet native front end to be specific to exactly what all of these users, the exact dynamics in which individual users are going to be interacting. So like if you're a watch trader, you probably don't care so much about like the CryptoPunk pool, and if you're trading domain names on 3DNS or like Fabric of Land or life insurance, you also probably don't care about those other verticals. So we kind of want the contracts to be deployed everywhere that they're relevant and helpful to people, and then front ends can just integrate them as they see fit, and ultimately that's like the beauty of decentralized composable contracts is that everyone can just interact with them the way they want to. We also tokenize the lender positions, so you can actually trade your deposit into this pool on a secondary market like an AMM or whatever. And so like if you're doing that on ETH, like Jake was saying, it starts to become a bit expensive, all of those transactions. So definitely want to be on L2s.
I love a lot of what you just said there, and it reminds me a lot of the ethos that we're following with the products we're building at Infinio. Zuhar, I don't know if you have any thoughts to add there in terms of what we're doing and how it kind of aligns with the thoughts that Connor and Jake just shared.
Yeah, I mean, actually, what's interesting is Jeff just messaged me offline because he's listening as well, and he was mentioning that it would be interesting to know how far we could go potentially with tokenized life insurance policies using something like MetaStreet, and he was just wondering what liquidity looks like on some of these assets and what rates are like. So. Yeah, kind of a question from Jeff, but also an interesting thought he had, and I think is relevant here. So maybe you could talk a little bit about liquidity. It would be interesting for us, and then like liquidity for I guess alt assets are, and what RWA sort of items are you seeing other than the commodities like watches, etc.
Yeah, so each of these lending pools is isolated to the corresponding collateral type. So like if you're lending to CryptoPunks, you're not exposed to, watches or whatever. But I guess like what we pioneered here with the watch rollout is this dynamic basically like Oracle based pricing, although it's not Oracle in the way that people typically think of like an Aave Oracle to determine price of assets, but rather it's pulling off chain information on chain. So in the watches example, we can basically reference the watches IO value estimates for each of these individual watches, and then use that to drive how the loans are being priced within MetaStreet's protocol. And the reason that's really important is because as you start to explore these, more unique asset types where, for the watches, like every single watch is going to have dramatic variability. And so you really need to be able to like pull some of this additional off-chain information on chain to then say, okay, we can aggregate liquidity across all of these watches. Now that structure has basically been pioneered, we can use that same logic and apply it to things like, uniquely sized life insurance policies. Obviously, every single life insurance policy is going to have a different, overall principal amount and like premiums and all this stuff. And so you want to be able to like normalize that and then say, okay, when I'm depositing into this pool, I agree to deposit up to 50% LTV on whatever V is, where V is basically determined by Infinio off chain and then posted on chain. So yeah, that infrastructure is like largely built out, and we're now starting to roll out some of these partnerships. I think at the end of the day, look, like attracting liquidity to any of these strategies is still like a business development effort on both sides. But I don't see any reason why these couldn't scale to be quite large and interesting. I think like something that people will be really excited about as they become more aware of these opportunities is that all of these lending strategies are delta neutral and generally fairly high yield profiles, like probably 10 to 20%, depending on where you are within the the like seniority of the stack. So if you think about getting 10 to 20% on stable coins that's not related to inflationary like governance token rewards, or anything like that, that's actually quite compelling. You really, like, if you were to go through the gamut of yield profiles in DeFi, that's actually probably one of the highest, if not the highest, delta neutral strategies. So I think it will start to be like really interesting as people become more aware of this space, which will probably take months.
I guess I have one question about that. So, the yield profiles do look or do sound really attractive. What would you say is there implicit risk there because, or is it just because this sort of thing has not really been discovered, and once it does, sort of people are going to arb that out, and it's going to go back down to what it should be, or like what are your thoughts there
I don't know. I mean, what it should
on
be. Like,
stables, for example, like 10 to 20% on stables sounds amazing.
well, I mean, what would you pay if you were going to a pawn shop and giving your watch to a pawn shop broker?
Right. Yeah.
Right? Like that, and that is the competitive market here. I mean, it's hard to picture that because it's like global digital 24/7 market, but really like your alternative if you were to own a watch is, I mean, pretty high interest rate, fairly predatory experience.
Yeah.
And so like it probably is fairly priced, right? If treasuries are 5 to 6 and mortgages are 8 and car loans are 10, a loan on your watch at 15 or 20 might actually be the right pricing. And then we'll see, right? Like the way that Metastreet works is the users dictate the interest rates. So if there's no appetite at 15 or 20, then it can come down and people can adjust accordingly.
Right. So you're just relying on the sort of free market I actually, when the NFT boom was back in 21, I remember there was I forget what it was called, but it was a platform, a peer-to-peer lending platform, one of the early ones that you could deposit, for example, an ape and borrow at like 35% LTV, and people would give you like you said, sort of a very very high APR loan against it, and it was relatively low risk for them at that time, and it was called, I think it was NFT Fi. I don't know if you've heard of it. I don't even know if it's still around, but it seems like a much more robust evolution of that kind of concept, which is really interesting.
Yeah, so actually, for a little bit of lore, Metastreet's first product was being a lender on NiftyFi. So we
Oh,
basically
cool.
organized a DAO and were the counterparty to most of those loans. And that was actually part of the inspiration for redesigning the protocol to look more like structured credit MBS because of how labor intensive that process was. And it was insanely good return profile, but you had to be willing to negotiate $1,000 to $5,000 loans all day long, which is just not really a sustainable or scalable
Right.
design, especially for debt, right? Like maybe if you're talking about a marketplace, okay, fine. But when you're talking about debt, I mean, the biggest balance sheet wins every single time. So you just have to aggregate liquidity, and there's no difference between my dollars and your dollars, right? It's a totally commoditized offering. So the only thing that matters is the size of the balance sheet and then the corresponding cost of capital.
That makes a ton of sense to me, guys. And thank you for diving in a little bit on that. And correct me if I'm wrong, Connor, but MetaStreet really got started in the NFT space with NFT lending, as you just said. And so potentially you could give a little bit of just your thoughts on how you're seeing the market evolve from just NFTs that were seen as digital art, the PFP craze, to now these backed NFTs that Watches.io are coming out with, and other potential opportunities for NFTs, for backed NFTs to be onboarded to MetaStreet, whether it be land, music, domains. Like, are there any opportunities you see pretty immediately, or themes that you hear getting talked about a lot? Just would love to hear your thoughts here.
Yeah, so the way we always think about NFTs, it's actually funny how this has evolved from just like a name recognition, and people think of NFTs and they think of Bored Apes, right? Which is like maybe impressive by Yuga Labs that is corresponding like visual you get. But really, what is an NFT? It's a ERC 721. ERC 721 is just a way to basket unique things on chain, just like an ERC 20 is a way to put uniform things on chain. And so it's really just a primitive for like representing value, right? And like that's why we thought this was a no-brainer to build a lending product around it. Because if you look at the corresponding like traditional financial capital markets, you have like currencies, stocks, these asset types that are uniform in nature, and you have a very robust lending market behind that, right? But then you have unique assets, things like real estate, capital, equipment. All of these things have a monstrous lending market behind them. Car loans, right? Like all of this stuff. And so if you just think, okay, people will become increasingly more online and digital, unique digital assets will become increasingly present, then it makes sense to have like a robust lending market behind that. So just because the first iteration of this was artwork and collectibles, which maybe the reason for that was because that was just the easiest thing to tokenize, does not mean that like that's the only use case, right? And that's a fairly like narrow view to think of representing unique assets on chain as the only thing this can be used for is like collectibles or membership passes. Like just obviously that's not going to be the case. So over the last 3 years, I mean, you have to keep in mind that in 2021, the collectibles was the only thing because the use of the ERC 721 standard was like 18 months old. And so when we started building MetaStreet, the only thing you could really lend to was art and collectibles. I think now we're getting to a stage in the overall development of the contract standard and awareness, and all these startups that have been built over the last 2 years are now delivering products and so on. And so now you have a lot of other use cases that are not specific to art and collectibles. And watches is one of them. There's also, like you said, tokenized land, domain names, music royalties. I talked to a guy that's doing tokenized diamonds, like shoes, obviously life insurance, and all of this stuff will continue to proliferate because it's just a natural progression of people that recognize that this is a superior method of transacting. And so as long as that's true, then you'll continue to have people that will build businesses tokenizing various unique assets. And every single one of those market participants could spin up a lending market on MetaStreet, unique and bespoke to their needs, and benefit from like existing, infrastructure, some amount of like lendiness with the contracts now having facilitated nearly $300 million of lending volume, and every year that they exist will kind of becoming increasingly trusted, from just like a security standpoint and so on. And so yeah, like we're super excited about the progression here. I think it's really hard to separate the underlying progression, which is really good, from the overarching like price cycle, which I think most people really focus on, and then ultimately it's harder to see like the real growth underneath the hood.
100%. And thank you for sharing those themes with us and just those thoughts. And with that, I believe Jake has a hard stop here at 12:30 coming up. And so with that, I wanted to just thank you guys for joining us so much and give you guys the opportunity to share any updates that are going to be coming from watches.io or MetaStreet, and also tell the audience where they can find you and stay up to date with what's going on with you guys.
I appreciate it. Yeah, it's been a good little sesh here. So we have some cool things planned in the pipeline. We're announcing it later today. We just put up about 600 NFTs of watches that are vaulted and ready for trading and purchase and borrowing against. So on the UI, there's now a variety of watches that are just like instantly available for you to buy. We also accept, doesn't matter like that you're receiving an NFT on base, like you could still pay an Arbitrum, you could pay an Optimism, you could pay an ERC EVM, ERC20, like you're able to buy in whatever currency you want, whatever's easiest. And I think that's important. You know, we're trying to create a world where you can list a Solana watch-backed NFT and then you can buy it in stable on Arbitrum and you can receive it on ETH mainnet. Like that's the world that we're moving towards slowly but surely. You know, it shouldn't really matter what chain you're on. You should be able to just trade watches. So that's that. And then, you know, there's some cool stuff in the pipeline we're working on with MetaStreet. I have a lot of ideas about how we can make an even better borrowing and lending market and more opportunities for people to make capital off of it. And then, yeah, you guys know where to find us. Watches.io on X, Watches on Instagram, Watches on Telegram, Watches on TikTok, like just the word Watches, and the domain Watches.io. You also can follow and interact with my personal X or my personal Instagram, Jake Plonskier on Instagram, at Plonskier Jake on Twitter.
Thank you very much, Jake. And that's incredibly exciting. I noticed that earlier today, and I thought that was new. That's an incredibly slick new feature that you guys should definitely check out if you haven't yet. And Connor?
Yeah, thanks so much for the time, guys. I think we covered a lot of kind of like the inspiration behind the product. People can definitely follow our Twitter, MetaStreet XYZ, which is also in this spaces, to keep up to date with, you know, protocol advancements and so on. But yeah, really appreciate the time and really enjoyed the chat.
Great. Really appreciate you guys and hope to have you guys on in the future. This has been our real world asset tokenization space. We do these every other week. In 2 weeks, we're going to be having on Mark Feidelman from Smart Blocks, and we're going to be talking about real estate tokenization. So we're very, very excited to have him on. And just one last big thank you to our guests, Connor and Jake. Thank you for the time and for the wisdom, and to our panelists, Zuhar Rashid and Tony Garcia, who are on the team here at Infinio. Thank you guys very much, and we hope to see you on the next one. Have a good one.
Thanks for sharing your story with us,
Thanks, guys.
Have a good one.